All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to 5 steps to find winning stocks in a volatile market. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Be sure to submit your questions throughout the webinar using the Zoom Q&A window, which is available in the upper left-hand corner and at the bottom of your screen. I'll be available to respond to your questions throughout the webinar. As a reminder, this is being recorded and a copy will be sent to everyone who is registered. Now, with no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at NASDAQ and industry conferences on fearless investing. Now, to get us started, we're joined by 2 very special guests. One of our newest members, Jeff Hammond, along with founder and CEO of Chaikin Analytics, Mark Chaikin. Mark, take it away.
Thank you, Joe, and welcome everybody. The reason I'm on Sandy's webinar today is to give you a little bit of market analysis because we've obviously been through a very volatile time. We're looking at a 1-year chart of the SPY, the most actively traded instrument that mirrors the S&P 500 index. And since we now have the benefit of the closing prices, what we see on this chart is a waterfall decline that started out as a pullback, got accelerated by one inflation number on February 2nd that spooked people, and then to pour gasoline on the smoldering fire, an esoteric exchange-traded note that enabled hedge funds and commodity trading advisors to bet on low volatility in the stock market blew up. Now, that may become important as we look at the normal pattern. So just summing up what we're seeing on this chart, we came down from 2873 on the S&P on January 26th, the new all-time high. Everything looked rosy. Earnings were coming out beautifully, still are. And then we sold down in a panic selling wave down to 2533. That's where the 200-day average price is. Now, I know many of you follow the 200-day average. Both individual investors and institutional investors rely on the 200-day average to provide some sort of sanity as to whether stocks are in an uptrend or a downtrend. We've now had 5 straight up days. 4 of them have seen the market up 1%. This is almost unheard of in the stock market. And with today's close on the S&P at 2731, which is 273.10 on the spider, we're now above the 50-day average and the 21-day average on a closing basis. The next slide will show you how you can put the current pullback into perspective. So there are 2 ways to look at dips in the stock market, 3 really. Pullbacks, which are declines of 5 to 10%. We've had 12 of them since this bull market began. So they're not uncommon. What is uncommon is in 2017, we didn't have one pullback of even 3.5%. Now, this slide is as of February 2nd. The market actually declined over 12%. So that's a pullback. What's a correction? A correction is a decline of more than 10% on a closing basis. There have been 5 of them in this bull market. This is now the 6th. Beyond 20%, that's bear market territory. So why is that important? Because every time you decline more than 10% on a closing basis, not just in this 8-year window, or 9-year window now, but throughout history, almost every time you're down more than 10% on a closing basis, the bottom forms in the shape of a letter W. So you make a low, you rally up just the way we're rallying now, then you come back down and test the low on lower volume. The big problem here is that if this event was in truth triggered by a blow up of an esoteric instrument that triggered margin calls, maybe it'll be different this time. But let's look at the next slide to see what has happened since 1945. You've had 75 pullbacks of between 5 and 10%. The average decline, 6%. Now, the reason that's important is these pullbacks typically last for just a month on average, 1.5 months. But then you recover to new highs in another month. So they're over quickly. That's why people say buy the dips. That's why buy the dips has worked. When you decline between 10 and 20%, you've had 27 of them in 73 years. These declines typically are longer in duration. That's why we've been telling people that if history repeats itself, and it normally does in the stock market, you're likely to make a bottom, not in a V shape, as you do in 5 to 10% declines, but in the shape of the letter W. So bottom, think the moving average at 2540, 200 day. Rally up, you've had that now. You've exceeded somewhat with today's close what the expectation would be, but you're still within the bounds of a normal pullback. We've retraced 50% of the decline, which was 340 points. The normal expectation is that in a decline that lasts 3 to 4 months, you would then come back down and test either the closing low at 2581 or the intraday low at 2533, but you still recover to new highs. So the reason this is all important is that Sandy is going to share with you how she found opportunity in this correction. We were calling it a pullback on Monday a week ago when we said put a third of your cash into the market, because we didn't know where the bottom was going to be or what the pattern was going to be like. And Jeff Hammond, who I'm going to introduce now, is on the webinar because he's a recent subscriber to Chaikin Analytics. And we felt that his experience using Chaikin Analytics as a new member would complement what Sandy's going to teach you. So with that, I'd like to thank Jeff for agreeing to be on the webinar this afternoon and turn the microphone over to Jeff Hammond.
Hey, thanks, Mark, and thank you, everyone, for joining us. I know it's been a crazy week to traverse the waters here, and I couldn't be happier to be sharing a little bit of my own experiences, some of the pitfalls of my experiences, and before I became a Chaikin Analytics subscriber, and share with you some of the successes as well. So with that, Sandy is one of those people who I really resonated with. I watched her webinars. I got a sense of what her thoughts were and her strategies. And for me, as somewhat as a relative novice in the industry or in the investing, Sandy just made sense to me. So I hope that you'll feel the same way at the end of this, and maybe some of my stories will resonate with you as well. So glad to be here. And Sandy, I think that's your cue.
Okay, Jeff, we're glad to have you. And Mark, thank you for your insights, which are so valuable and I know are so welcomed by the audience. So what's the problem today? I mean, Mark just showed you those slides of the SPY, of the steep declines and the sharp up moves and the sharp down moves that it's had. There's a lot of volatility and what I call chaos going on in the market. And what feels like chaos, though, really can be an opportunity. And that's what today is all about, because despite all of this, or rather because of all this, there are some great buys out there. And I think of it as like stocks on sale. I'm a big shopper and I like to buy things on sale. So this is my time. And what we're going to give you today are the tools to buy those stocks on sale yourself. So Joe, I think you've put the link up on the sidebar of the workbook that I encourage you all to download. This gives you your plan. This is the plan that Jeff and I are going to be walking through today, the steps that we follow to make good decisions, to know when to buy, when to sell. And you can download that, make some notes, and follow along with it. Okay, so an overview. The S&P has grown an average of almost 10% over the last 20 years. And if you look back for the last 50 years, it's the same 10% average. However, individual investors have only averaged 2.5% return. So that's very poor. That's only a fourth of the performance that the S&P 500 has done. And why is that? And that's because people buy on emotion, not fact. You know, we are human beings, and as such, we've got emotions and opinions, and we listen to people who have emotions and opinions, and you bundle all that together and you get poor performance. So that's not the way to go. You could say, well, gee, I'm going to invest in mutual funds because there I can spread my risk. I don't have to pick stocks and risk picking some losers. I'll go into mutual funds. Well, that's not been so profitable either. 81% of actively managed mutual funds have underperformed the S&P, and this comes out year after year, decade after decade. So that's not the answer. And primarily not only performance, but there's fees involved with this. So you're paying high fees for poor performance. Not a great formula, right? Our solution is to buy bullish rated stocks. Bullish rated by our rating, Chaikin Power Gauge rating, which we're going to walk you through. And depending on the power gauge rating, can put you in stocks like these. These are all stocks that I've been in or currently am in. And as you can see, the performance has gone from, 49% up to 60% on a one-year basis when you compare it to the S&P, which is up 15% on a one-year basis. So, I mean, 15% is not bad. That's above average in terms of S&P performance. But wouldn't you rather have a stock like APO, Apollo, that's up 57%, or LPL Financial, for instance, is up 57% over the last year. Those are 4 times the performance that you could get by going into an S&P 500. So that's what this presentation is all about. Jeff and I are going to show you how we've discovered and the stocks, the steps that we take to discover winning stocks, and even in today's volatile market. So this is the type of stock we're going to be looking at, ABBV. This is a stock I recently bought, but look at the chart here. This is what we're going to be going over today in detail. And I wanted to give you a quick kind of flash screen of it so that your eye can start getting accustomed to this. Basically, what you want to see is all green, which you see here. The bottom third of the chart is all green. That's good. The price is trending up, which is good as well. So this is the bullish type of stock that you want to be looking for now. And as you can see, it is all green. Even with this big pullback in the last 2 weeks, it still has remained all green, which means all systems are go to buy this stock. So what's the point of all this to begin with? I grew up in a era in a family that it wasn't considered polite conversation for women to even talk about money. And when my family would go out to dinner, the women, I had 2 other sisters, and my mom, we were all handed menus with no prices on them. I mean, it was that taboo for women to even think about what something cost. That was all not considered ladylike. So it's been quite an education for me, a transition for me to get used to reveling in the fact that I'm making money. And not only am I putting this money aside for our retirement fund, but I'm also celebrating. And Mark and I have taken some fantastic trips with the profits that I've made. We've gone to up here at Istanbul, Turkey. That was all paid for by one stock gain, and that was on Skyworks, Southwest Air, excuse me. I bought Skyworks the same year, but just alone on the profits from LUV, I was able to fund our trip to Turkey for 2 weeks and have money left over. We've been out to Vail, Colorado. We've been to Italy, Rome. We're going to Florence in May. And these are all our celebrations, they're paid for thanks to my stock gains on Chaikin Analytics. So why should you listen to me in the next hour? Well, since I've started investing in 2012, I've beaten the S&P 500 every year. And by correlation, since the research shows that 4 out of 5 pros underperform the S&P 500, I then have outperformed the pros as well. I started investing in 2012. I started with stocks that I knew, like eBay, Yahoo, there's Love, Southwest Air, and there's Skyworks. And those all produced some really big wins for me. In 2016, I got into what I call these triple-digit winners. These are small cap stocks I'd never heard of, and you probably haven't either, but stocks like Centa, Quad Graphics, and NACO. These were all up triple-digit how do I find these? Well, this is the whole 5-step method I'm going to show you today. I only own, well, it was 8 to 10 now because my positions have gotten bigger. I'm spreading my funds out into more like 12 or 15 stocks at any given time. So these are not a lot of stocks to manage and follow. In 2017, I was in stocks such as APO, I still am, Lam Research, which I still am, DR Horton, I sold that for a profit. But I spend 10 or 15 minutes a day. And again, I invest in about 12 or 15 stocks at any given time. And that's a manageable number. I have friends who have several hundred stocks, and I honestly don't see how they can really manage that. That would be pretty tough for me. So Jeff is on today. He's already introduced himself briefly. And maybe, Jeff, you could just hop back on and give us a little bit of overview of how you got started investing.
Yeah, I'm Sandy, you and I have spoken offline a bit, and we share a lot of similarities in the sense that I was a complete novice. I was kind of late to the game on even the 401k and had a young family. I was really just dealing with all kinds of stuff. But then what do I do with all this money? I'm maxing out my 401k and had no idea until just recently that I actually could manage my own money in my own 401k and where it was going and what it was doing. So what I did was I just picked a really aggressive hedge fund that I knew I wasn't going to retire for another 20 plus years. I'm not even going to look at it and just hope. I kid you not. That's about as much investigating I did in my investing career.
You're not alone, I'm sure, Jeff.
Yeah, I'm wondering whether or not there's a couple people might be nodding their head going,
yeah, those of you nodding your head, just say nod in your Q&A box, will you? And
right.
Joke and monitor
and
that for you.
When you started in 2012, you bought stocks you knew, and so I had started maxing out my 401k. I started feeling a little bit better about where I was going to be and where I was going, and I started an IRA, and I had some money now that I was able to actually invest in. So I went with 2 stocks that I knew, and they were being released as IPOs, and Dunkin' Donuts, because I drink it. It is my morning crack. I'm not ashamed to admit it. And Facebook, sadly, we're probably all on there a little more than we should be. But bought those, never looked back, was seeing some profits, was pretty proud of myself. And sadly, then my third decision was Under Armour, because I'm also a golfer. I'm also an athlete. And I try to keep with the theme of I just want to invest in what I know. Bought Under Armour in May of, I think it's 2015 or what have you. And it was $44 and it went up. It went up inside of 60 days. It went up to like $52. And I was like, yes, another winner. And sadly, I watched it for months on end, just precipitous drop to where I was forced to sell it at $28 and lost pretty much all of the profits I gained with Dunkin' Donuts and Facebook. Fast forward to where I got the opportunity to meet Mark and Sandy at a completely separate, unrelated business function and got introduced to what they do. I could just see and feel the passion they had for sharing this information, sharing this data, this information. But when I learned about it, I kind of stood back for a while. I joined in late, mid-December, and my first trade was Monday. I was just wanting to make sure, am I doing this right? And we're going to walk through a little bit of what my experience was, and Sandy's going to help with really identifying just the value of some of these tools. But I promise you, if anyone is here that is somewhat timid or just really overwhelmed, this for me is the greatest thing I've ever found, because I've moved the emotion out of the equation and made 10% on my one stock that I purchased on Monday, sold it later in the week, and I've already bought my second stock yesterday, and that is up over 4%. So we'll go into that a little bit, but just want to share that because I really feel strongly that there's probably a number of people out there that could benefit from knowing that you're not alone when you have those failings and those things that keep us from wanting to go forward. But this is really going to be helpful. I think you guys will love it.
Jeff, thanks. You did get some nods in the Q&A box, so you're not alone.
I feel better. I feel better already.
And those of you who gave the nods, you're not alone either. All right, so let's just step back for a second and go through how I started investing. Now that we've heard how Jeff got started, I also started investing in the market with 401k plans back when I worked for Elizabeth Arden and L'Oreal when I lived in Manhattan in the 70s and 80s, and then moved back to Philadelphia and worked at the Franklin Mint in the 90s. And the mutual funds that were offered were terrific. The Fidelity Magellan Fund and Legg Mason's Value Trust, two really strong mutual funds. So the funds did quite well. But as my career grew and as my 401k grew, I didn't feel I was confident to manage this, and that I had just been lucky picking those two great funds, but didn't want to depend on luck. So it made perfect sense to me to hire a professional to take care of it. I mean, after all, if I have a medical problem, I go to a doctor. If I have a tax problem, I go to a tax attorney. So it made perfect sense to go to a professional wealth manager to manage my 401k. So the first thing he did was to sell the funds that I was in and put me in 8 or 10 mutual funds of his choosing. And Mark says that's pretty typical for procedure of what wealth managers do, which was fine. They went along okay for a while. But then along comes 2008. I know I don't have to remind anyone what happened in 2008, but it was a pretty dramatic time for me, as I'm sure it was for many of you, because I kept calling my wealth manager saying, boy, you know, everything's pointing down, dropping. I mean, it's clear that the market's going to go down. Shouldn't we sell these and just put the money on the sidelines? And the answer always was no, it's best to just to stay in. They'll all come back. Just hold the course. And because I lacked the confidence to overrule him, I mean, basically he's the professional, right? He should know what's best for me. I didn't sell until the portfolio went down 40%. And that was in the spring of 2009. And by that time I was so discouraged, I just couldn't take it any longer. And took the money out of the hands of the wealth manager and opened a Vanguard account, a self-managed account at Vanguard, put it in there and put it in an S&P 500 fund until I could figure out what to do. But it was a pretty dramatic time for me, as I'm sure it was for many of you. And just type agree, if you don't mind, in your Q&A box if you had a similar experience of losing a lot of money, because this is money I worked really hard for, gave up a lot of things to put this money aside, and then to see 40% of it literally evaporate really overnight. Oh, I'm getting so many agrees. I'm so sorry. Patricia, James, Tom, Gerhard, Karen, a lot of agrees, which, I mean, I feel your pain as I'm sure you feel my pain, but we're not going to let that happen again, right? I mean, that happens once in a lifetime, and from kind of the ashes, what's the saying? Out of ashes comes triumph, or something like that. So that really was a turning point for me, and that really gave me the kind of the stick in the ground to say, okay, that enough. You know, I've got to take control of my own financial future. After all, who cares more about my own money than me? And I did. And since the fund's gone up over 3 times what it was when I took it back in 2009, and everything's great. But that is really one of the reasons, probably the main reason I'm sitting here telling you this story and telling you today about how I do outperform the market, to give you the sense that you can do this too. You know, we all have to take control of our own financial future, as Jeff has has realized as well. And we can do this. We can do this with the right tools and the right methodology, and without emotion getting in the way. So let me pause here for a minute to ask you all if you'll take the poll that Joe's going to be putting up, and just tell us, Joe, do you want them to put multiple challenges in, or just one?
Yeah, let's do multiple choice. Check anything that applies to you when it comes to challenges you encounter. So, whether it's lack of education, letting emotions get in the way. There's a whole list of things here that we've heard from, a lot of the people who have come to Chaikin Analytics. But let us know what you think. Tell us what resonates with you. And, if you perhaps don't see something that you feel is a challenge for you, go ahead and chat that into the Q&A window. And we'll be really interested in hearing what you have to say.
Great.
And so I already see there's a lot of people have responded. Big thank you to everybody already. We'll give this about 15, 20 seconds, and then we'll take a look at the results.
Okay, great.
All right, still see a lot of results coming in. Take a few more seconds, and then we'll look at what's on everybody's mind. All right, let's take a look. And it seems like looks like there's 2 or 3 big ones. Timing, which is pretty common, right, Sandy?
Always, always number one.
And not a surprise, all the way at the bottom, uncertainty in the market. I'm sure that's resonating with everybody lately.
And information overload, those look like in second place, right?
Mm-hmm.
Third place, letting emotions get in the way. Okay, great. Thank you all for responding. That really helps frame the conversation as we go along here. Well, needless to say, we anticipated that. So we've already baked these into the presentation. We're going to be addressing timing. Your biggest challenge. When do you buy and when do you sell? We're addressing also the challenge of fear and trading on emotion. That also was, I think, number 2. And volatility is back. So we're addressing how you conquer volatility and make profitable trades. And of course, our old favorite, information overload. I mean, just in the last 10 years or so, think of the information that's thrown at us every day through, emails, text, 24/7 news cycles. It's like bombardment of data. How do you make sense of it all? How do you take data like this and make a decision to buy, sell, or hold based on this? I wouldn't have a clue. So these are the steps we're going to be walking you through today. And let's start with the first step. But all of these steps are shown on what we call the Financial Freedom Fast Track, which is the Chaikin Analytics platform. And the slides that I'll be showing you today are all taken from Chaikin Analytics. All right, rule number 1, you want to depend on tools that you can trust. You've got to have the right tools. If you're going to be relying on information, the information has to be reliable, right? And for us, that is the centerpiece of that is the Chaikin Power Gauge stock rating model, which you'll see here looks very simple, right? It's a very simple, looks like a gas gauge. What this does is it looks out 3 to 6 months, and it looks at a stock's likelihood of out or underperforming the market over the next 3 to 6 months. Because after all, if you're not going to outperform the market and get those outsized returns, you might as well just go with the SP 500 and be happy with the 10% a year gain, which isn't bad. That's fine, and I have some money in the SPY as well. But if you want those big returns, you've got to in our view, depend on the power gauge rating to help you find those. So what this does is it takes the data on the right and boils it down into a format that's very easy to understand. And how this all came about was after the 2009 whole financial meltdown. And Mark and I were getting together about that time, and he could see my distress And he could also see the action I took, which was to take it away from my broker and put it into a self-managed account. Yet I didn't have tools or the know-how or the knowledge to manage this money myself, but it's suddenly, in my account with my name on it. So what do I do? So he saw literally billions of dollars coming out of traditional brokerage firms, going into self-managed accounts like I put mine in at Vanguard. And he said, I'm going to come out of retirement. He had sold his company to a division of Reuters, where he had created tools for the pros for 40 some years so that they could make better decisions for their clients. He said, I'm going to come out of retirement and take what I've learned on Wall Street, what Wall Street uses, but give that to individuals in a way that they can understand. And that was the culmination of really his life's work, built into what you see here on the left, the power gauge rating. So as you can see, it's broken down into 4 components, and there are actually 20 factors making up those 4 components. But what it does is it cuts through the clutter, takes care of information overload, one of our big challenges, and comes out with what John Carter calls an awesome meter. And I use this because there are about 20% of you registered today are from John Carter's community, and he's an extremely well-respected man on Wall Street, but he uses the power gauge rating. And he says there's a lot of hyped up tools out there, but a single tool that combines 20 technical and fundamental factors to anticipate a stock's profit potential got my attention. It's called the Chaikin Power Gauge Rating. I thought this looked like an objective, awesome meter for stocks. An objective, let's underline that, because that means no emotions, right? I like that it includes fundamental and technical analysis for stock selection and timing. Most systems, as you're probably aware, either give you a technical view or a fundamental view. This does both. So it's like one-stop shopping. So what are those 20 factors? Well, they're here. You can see they're broken down into the 4 components. You can get a power gauge rating on each of those 4 components, as you see here with AMAT, or you also can drill down on each of these 4 components, and you'll get a rating for each of the 5 factors in that component. So like a Warren Buffett would look at financials, for instance. A Jim Cramer depends a lot on earnings, and he would focus heavily on this. The expert opinions is really our secret sauce, and I highlight 2 factors here, short interest and insiders. These are factors you're not apt to find elsewhere, but the short interest is really, I found to be very reliable indicator in that the short sellers are considered the smartest people on Wall Street. They only short or basically sell a stock before they own it because they think that stock's going to go down. And then when it does go down, they buy it back and they make the profit kind of in reverse. The insiders are also reliable because it's typically management who has stock options, right? And who knows more about a company than someone working there in management? They're only going to buy for one reason, and that's because they think that stock is going to go up. They may sell for multiple reasons. They need cash for college tuition or a down payment on a house or whatever. It may have nothing to do with the potential of the stock, but they're only going to buy that stock if they think it's going to outperform. And therefore, that's become very reliable for me. And during earnings season, which we're in now, I zero in on earnings surprises, because if a company is beating analyst estimates, that then in essence contributes to a spike in the stock price. And that's where I've been able to reap a lot of the rewards, even in the last week or so. So we'll get into those.
Sandy,
oh, sorry. Go ahead.
Jump in. No, just
Absolutely.
to jump in real quick. It's important for anyone that's on here to realize you're able to manually input some of these factors into your own filter and your power gauge. And you and I, we were meeting yesterday, and I was like, oh, that's funny. I have earnings surprises, one of my factors, but I also have relative strength in the market and earnings consistency. And we ran that report, and we actually found a couple of stocks on both of our results that were similar, that were the same. So you really get to see in a very simple, you can't break it. Like, it's really easy to just plug and play, hit submit, and out come all the results. And we'll go into that a little bit later, but I just wanted to stress to everyone, it's actually fun. It's enjoyable. I get to kind of like find stocks I would never have been able to find and have confidence in researching. So
thank you, Jeff. Yeah, that's a great kind of balance to my methodology to see how you use it as well. Some people do what Jeff and I do, drill down on a couple of the factors. Other people just depend on the overall power gauge. So it's up to your own, individual style. But you can, as Jeff say, you can kind of modify and shape it to fit your needs. Let's put in another plug here for a model. Why do you want to depend on a model? Well, a very well-respected analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to humans who are swayed by emotions and opinions. And who isn't swayed by emotions and opinions, particularly in the last couple of weeks with these wild swings? And even what you're hearing on the news channels, the financial news, those commentators, they're humans. They all have emotions and opinions that are built into the data that they're giving to you. So we really need to have our own objective view of a stock's performance to be able to make our own decisions. So to give you a little more credibility on the power gauge rating, we have partnered with NASDAQ. Back in 2013, they asked us to create 3 indices using the power gauge rating to filter out stocks in their small cap, large cap, and dividend achiever indexes, and filter out the stocks that didn't have a bullish power gauge rating. So since the inception, those Chaikin NASDAQ indices have outperformed their benchmarks year after year. That then got the attention of New York Life Mainstay Investments, that's their financial arm of New York Life Insurance, and they then licensed those and created ETFs from them to offer their money managers, so that now money managers and their clients, meaning the individual clients, can now invest in a portfolio of stocks based on the Chaikin power gauge rating. And they as well are outperforming their benchmarks based on the NASDAQ indices, NASDAQ Chaikin indices. Okay, in addition, many of the hedge fund managers that Mark sold to in his previous company, like Soros and Paulson, use the power gauge rating. Mark is quoted at least once a week on CNBC. And the financial news has covered us and continues to cover us consistently. And Jim Cramer, I know I was interested in the registration that 30% of you those who registered came from or had registered back to January 31st when Jim Cramer and Mark did a live 1-hour talk in Jim's studio at thestreet.com in New York, talking about their outlook for stocks in 2018 and what each of their picks were and why. And Jim Cramer had come out with this, Chaikin Analytics model's the best, used it at my old hedge fund. So Jim endorses the reliability of the power gauge rating as well. So let's move on to what to buy. So this is step 2. We call it a classic bull, and it has to have certain characteristics, which are outlined here. Again, these are in the workbook. When you download those, you'll see this slide. But let's break this down and go through one by one, explaining what each one of these means. But before I do that, I'm going to show you this Wyckoff chart. This, when I first looked at it, I thought, oh my God, how am I going to make any sense out of this? But actually, it's really helpful. And since timing is our #1 challenge, this can really help guide you with timing. The way to read this is that understanding a stock does not go straight up or straight down. You know, when I worked in cosmetic business, for instance, selling, marketing their designer fragrances, for instance, a bottle of Chloe, for instance, was, say, $100. Whether you bought that at Bloomingdale's in January or you bought it in June, it's $100. Not so with stocks, right? They go up and down and across and zigzagging, and that's what this chart outlines, the typical course a stock price takes with any given stock. This is the pattern. This is the pattern to look for. So when you're buying a stock, you want to buy it when it's back down in this, what's called a throwback. Mark referred to it as a pullback, a dip, but every stock has these pullbacks. Every stock then also, a bullish stock on the go, also spikes up and goes sideways and spikes up again and pulls back. So you, knowing that this is the natural pattern of a stock, you can anticipate and not buy a stock, for instance, when it's peaking up here. You're going to wait. You might have to wait for 2 or 3 days. You might wait for a week. You might wait for a couple of weeks. But the stock will pull back. It's inevitable. You want to sell it when it's up here. And I'll point this out on the charts as we move along. So let's look at the first example of a classic bull. This is a stock that I actually just bought. So Michael Kors in apparel. This looks pretty good, right? Look at all the green. The first thing to look for is the power gauge rating, which is this ribbon along the bottom. You can see for Michael Kors, it turned green or bullish in July and has had a steady run since then. Right above it is relative strength. This is another Chaikin indicator showing how this stock performs in relation to the SPY. And remember, the SPY is the average against which most investors judge themselves. So you want to be outperforming the SPY. If you're not outperforming the SPY, why are you investing in this stock? You know, you're only investing in stocks so that they do better than average, right? So this is showing that since August, all this green kicked in, this stock is outperforming the SP 500, which is great. Above that, I'm going to come back to overbought, oversold, but look at Chaikin money flow here, which are these kind of mountains. These mountains of green mean that institutions are buying this stock. And Mark basically made his name on Wall Street some 35 years ago when he created Chaikin money flow, which is now on every stock charting package worldwide. It's on Bloomberg, stockcharts.com. I mean, any stock charting package, you'll see Chaikin money flow or maybe CMF, but it's widely used. And what this does is it measures institutional money coming in and out of a stock. And so, you know, so what? Why is that important? Well, if the institutions are buying, because stocks are based in large part based on supply and demand, it's going to push that price up. If people are buying, think of them, if they're buying anything for any commodity, it puts it in more scarce inventory if a lot of people are buying it. So if there's less to be bought, the price goes up. If there's more to be bought, if institutions are dumping the stock, that'll flood the market with all of this, which will in turn then bring the price down. So by knowing where institutions are, knowing what they're buying and what they're selling, you have a huge insight into how Wall Street works. And follow the money. Just remember, follow the money. Now, it's natural for any stock to have minor pullbacks like this. This is nothing to be concerned about. Even this is not any big deal. And we'll see this on, I'll point this out on other charts as well. And also, you want the price to be trending up. I mean, you want that momentum to be trending up if you're buying a stock. Everyone pulled back here. You know, end of January, early February. This is a typical pullback, which I saw as a buying opportunity. You know, this is where you can use volatility to your advantage by identifying these bullish stocks. Everything's green, right? Just a teeny bit of tick to red, but everything is still green. So when that stock pulls back to a really good price, which it did just recently, it was like February 8th, last week, I bought the stock at 60. And this stock had gone up as high as the day before, it went up to 70. You can see they reported earnings. It spiked way up. It's a great earnings report. And then all this turmoil in the market hit, and all these automated orders went in for ETFs that then kind of dominoed effect and sold the holdings in them. So through no problem with Michael Kors, this stock was, like everything else, was being sold, pushing the price down, and that made it a very attractive stock to buy on sale. So I put in a limit order. Mark said with all this volatility, when you're buying, put in a price, not an even price like $60, but put in a price like I put in 60.60, and wait for that price to be hit. I can't watch the stock all day long, so the limit order allowed me to put that order in and get it at a really low price. And it's now, I think it closed today up over 64. But this gives me confidence because all this is green here. And this gives me the a time now to talk about this overbought, oversold indicator here. Think about going back to that Wyckoff chart I showed you. This measures the peaks and valleys. So as you can see, going back to like December, November, there's a lot of big peaks back there, and you can see how that correlates to this stock trending up. I mean, it pretty much went straight up from November up to February 7th when they reported. It spiked up and then it pulled back sharply with the market downturn. But this helps you identify when to buy because it's now dipping down. When it dips below this 30 mark here on the overbought, oversold, this is your ideal opportunity to go in and buy. And that's exactly what I did. Let's look at another example. This is ABBV. This stock has been really strong. I mean, look at all this green, a couple of ticks on the power gauge rating to neutral, but with everything else staying green, you know, it's pretty smooth sailing. And look at these big chunks of money coming in. Look what happens when the big chunk of money comes in. It spikes up. It's so predictable. Look what happens here. Big chunk of money spikes up. This had been on my watch list. I keep a watch list of stocks that I'm watching. And I flip through that every day, going through the bullish and the very bullish candidates. I don't bother going through the neutrals and bears, although in this environment, I do go through neutrals because they still could be really good stocks. They've just pulled back in price. And then I flip through my own stocks, my 10 or 12, 15 stocks that I own at any given time, and flip through the stock charts each day. So on my watch list, I'm flipping through. I see this was, you know, spiked way up after they reported earnings, was, you know, really not the right time. You don't want to buy it when it's way up here. But just like most other stocks, it pulled way back in the ensuing days. And that gave me, again, my opportunity to put a limit order in. I put in 102. That was the day on the 6th. It was Tuesday that the futures were way, way down after incredibly volatile Friday and Monday. And so I put a limit order in of 102, anticipating that big drop at the open, which happened. And then that day, the stock rallied back up to 113, but I was able to get in on it on this very bottom dip right here. And it's now at 113. It's kind of gone sideways. But again, it had pulled back. You can see this indicator's oversold. Strong power gauge rating, strong relative strength, and strong money flow. Although money flow in everything started to kind of even out as institutions were selling because of all those automated orders that kind of kicked in. I circled down here the articles. On every stock chart, we have articles, and by going to this little caret here, you can expand it to go to see many more. But you can click on these, and this was an article just recently, well, it was today, about ABBV is benefiting big time from tax reform. And that's why, you know, it's now such a well-desired stock to own. So I encourage you to put this on your watch list and watch it. I mean, I got this stock on sale. I got Coors on sale. This is how you can use this volatility. Go with power gauge, bullish power gauge rated stocks that have this set up, strong relative strength, strong money flow, and you'll be doing yourself a big favor. So Jeff, how about if you get on, and this is another recent example just from this week, Jeff. So why don't you walk us through what you've done with ABC?
Well, so as I mentioned before, I'm not incredibly well versed in the like. So this was really interesting to me because I had no knowledge of this company whatsoever. But one of the things that I love about being a part of the Chaikin team is that every morning you get an insight email that highlights a recap of yesterday and what was going on and some stocks to look for. And on Monday morning, in my inbox is an email, and one of only 2 stocks that were highlighted was AmerisourceBergen, which is ABC on the stock ticker. So I was like, all right, well, let's see what we're at here. It felt pretty comfortable, and I really bought into the idea that the market is allowing us to identify some stocks that are on sale. So what I didn't realize, too, is that not only did we have the incredible pullback that everyone sees here where the arrow is, but they were also in the news for an acquisition from Walgreens. I put in a buy order at $88.02 and watched it the entire day go up over 98 and pulled back a little bit in the end of the day. And I'm sitting there and I'm talking with Sandy, and I said, I had my first stock. I bought my first stock. She's like, oh my God, that's great. And so she goes, which one was it? I tell her all this, and she's like, so we're probably at a place that you're over 9.5% profit just from this one trade. I would recommend maybe we just sell this puppy and take it and say thank you, because as you look at the power gauge here on the bottom, it's neutral. There's a lot of money in it. They had their earnings, but it was just one of those things. I got the information. I made the purchase. I felt comfortable with it. I got my 10% or roughly 9.5% of profit and washed my hands of it, and then watched it go down for the next 12 hours. Now it's back up to about where I sold it at now, but it really is a great example of how you can use this tool to identify even stocks and industries you may not even be familiar with. And it was that exact type of experience that led me to buy my second stock yesterday, and that is continuing to go forward as well. So just wanted to share that as an example for a lot of you on there wondering, how can we use this? How easy is it? And it's really easy.
That's great.
Yeah,
and smart to take that too. Yeah, smart to take that 10% profit and say thank you, because today the stock is down.
My wife said thank you too.
Yeah, now you owe her dinner, okay?
Exactly. So it's great. Yeah, but I mean, just before we move on to the next slide, I wanted to also point out where that yellow arrow is also a buy indicator on the tool. So it was very clear where it was. It had pulled back, and it provided every opportunity for an investor to say, now is the time to buy. And I just dove in with both feet and used the information available to me. So it really worked out well.
I told Jeff, don't get used to making 10% profit every day. It doesn't always happen this easily, but I know, I'm sorry to break the news, but there you go. Yeah, I'm glad you mentioned those little triangles, because I don't think I explained that very well. But we do have 6 pairs of buy-sell signals that you can see. One triggered here. It's the overbought, oversold one. Triangle right here, which is how Jeff knew the time was perfect to buy this, because it was oversold, meaning dipping down on this indicator, going with the dip on the Wyckoff chart. And they are a tremendously helpful guide with timing, both getting in and out of stocks. So thanks, Jeff. Maybe you want to read Sandra's testimonial.
Sandra's story is very similar to mine, and that was where I said earlier, I said the extent of my investing was really my 401k. I just picked an aggressive hedge fund, and I didn't really have enough knowledge to even know I could actually manipulate or manage my own money. So, Sandra here says, my 401k was up 47.4% year to date 2017. I could not have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, you can do this. And trust me when I tell you, you'll hear that a lot from Sandy because she's done it. And she was more excited than I was yesterday when I sold it for a profit. It was really fun. So Sandra goes on to say her husband is also really happy about it too. So it's just a great opportunity.
Sorry, I jumped ahead. I didn't mean to.
It's all good.
Let me get back here. Uh-oh. Wait.
Awesome.
Oh, rats. This thing is very sensitive. Let me see. Back. It's not going back. Yeah, here comes my friend Joe. Get it back for me. Click on the page.
Well, this is actually one of my favorites. That's one of my favorite screens. We'll get into that a little bit as well. So.
All right.
You guys all got a little bit of a sneak peek.
All right. Joe saved the day. Okay. We are really running long here. So bear with us. This is going to run over the hour, and it is being recorded. So if you have to jump off, go ahead and jump off. You'll get the recording tomorrow. But I hope you're able to stay with us and hear us out because there's still a lot of important information to go through, but we'll try to get through it as quickly as we can. So step 3 is you want to buy strong stocks in strong industry groups, and that is because that really puts the wind at your back. The research shows 50% of a price move is attributed to being in an industry. Zacks ranks every stock into 64 kind of buckets. And then we rank those buckets based on the proportion of bullish to bearish power gauge rating stocks. So you can see in our industry view list here, like banks major, they've been talking about banks being a big beneficiary of the tax reforms. You want to invest in the stocks that are in these strong industry groups. There's a number of ways you can find it. You can sort here. If, say, you're interested in, interested, for instance, in a major bank, you can go and flip through the 16 bullish rated stocks that are in that group, or you can depend on Mark, who comes out every week, sends a market commentary out to our members that is incredibly valuable with the information similar to what he just introduced us with when we started the presentation. But in that, he also goes through, or he lists stocks of the week, specific stocks that he recommends. One recent week being JP Morgan. Another recently was Raymond James. You also can go into what we call the stock discovery engine. This is like a Pandora for stocks. You seed this engine with a stock. As you can see, I've seeded it with ABBV, and that will tell you other stocks like that. I mean, this is huge, and this is what earned us the Benziga award in 2017 for Best Stock Ideas Platform. We don't have time
Sandy,
to go. Yeah, go ahead.
Just real quick, if you can go right back to that page, I wanted to just point out one thing that is great. Every one of you guys, if you had a stock that you were looking at, you were able to look at other stocks in similar within the industry. Sorry about that, Sandy. I made you. Don't worry. Don't stress.
There we go.
And you looked at these 10 stocks, and you were able to, in a quick glance, see very bullish, 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 and then very bearish, very bearish. Which ones would you actually look at to want to invest in? That's the beauty of this. Like the ability to go, I'm interested in other stocks similar in that industry, and then immediately be able to have data at your fingertips to identify which stocks within that industry would be a worthwhile investment. That really helps narrow down the hundreds, the dozens of stocks that can overload us in our information. One of the things that we talked about earlier that's bogging us down. So I just want to real quick just point that out, because that's something that when I use this is really helpful for me.
That's a good point.
And if you're new to this will be great.
That's a good point. And I own Gilead, for instance. So it's like, oh, that's cool. That's cool, because Gilead has very similar characteristics to ABBV. That's cool. Also, if you sell options, if you trade options, it gives you short candidates. What are the companies the opposite of ABBV? If you want to bet on their going down.
Perfect.
The other way to do it, because we've got 5,000 stocks to research, right? So how are you going to get through 5,000 stocks and identify the creme de la creme, the ones that you want to focus in on? Well, we come out with this screener a couple of years ago, and I think this is really singularly the best attribute that we've done for our members. And what you're able to do here is to plug in your own criteria and build a list only of candidates that meet those criteria. And you can start with the strongest industries. This will by definition only pick stocks that are in the top 20% of industry groups. Well, how cool is that? So I don't have to go through banks, major, and aerospace, and apparel, and I don't have to look through each of those stocks, bullish stocks in each of those industry groups, and pick out candidates to put on my watch list. This does it for me. So I actually save this list of this criteria. I just pull it up. I click on, Sandy's criteria earnings and plug this in, and literally in seconds, I get a list of stocks. So this is typically what I do during earnings season. Strongest industry groups, obviously the power gauge rating is strong. These are those three factors that I pointed out when we went through the power gauge rating. And then these are the classic bulls, criteria, money flow and relative strength being strong. So you can take any universe of stocks and run that screener. So this is the screener that I ran today based on that criteria. I took 5,000 stocks, and literally in less than 30 seconds, I'm down to 4. I can put these in a list, and then I can flip through the stock charts. And I see Lazard here has a triangle, has a buy signal. So let's take a quick look at Lazard. Here's the relative strength buy signal. And I broke down the power gauge rating for you. You can use a drop-down menu to do that. You can see every component is very bullish with the exception of earnings, which is just neutral. But they've already reported earnings, and they triggered a relative strength buy signal today. So, looking at this chart, how does this look? Is this, this look like a pretty good opportunity to buy? Or would you watch it? Or would you avoid it altogether? And I think, Joe, we've got a little poll coming up, poll question you can put up to see what the audience is thinking in terms of whether they should buy this stock or just watch it and not buy it right now.
Yeah, pretty straightforward question in this case. What would you do with Lazard, L-A-Z? Would you consider buying it now, or perhaps would you give it a little bit of time and wait? So we'll give that just a few seconds.
Okay, thanks, Joe.
All right, and let's take a look. Most of you would buy.
72% would buy it. Yeah, I can't disagree. It's pulled back. It's on sale. Everything's green. You see money starting to come into it nicely. Strong relative strength, strong power gauge since October, and you're getting this nice buy signal, and you've got all these very bullish components. So sure, put that on your watch list. There's a great stock idea. So you see, in what, less than an hour, you all are pros at identifying the potential of a stock. Now, I've made what I call my short watch list. I have my watch list, which has probably 40 stocks on it. But when this turmoil and market correction came, I created a very short list. And these were the ones that I wanted to really watch carefully and put limit orders in, which is how I bought Coors and ABBV. And you can see Lazard is on my list as well. So these are other great stock ideas. You saw JP Morgan and Raymond James down here were two that were recent stocks of the week. Boeing was the strongest stock last year. Incredibly strong company. They interviewed him, the CEO, today on CNBC. Coors I own, we talked about that. So you can create a very short list, and during this really intense volatility, put limit orders in. You know, I put them in at a couple of percent below what they closed the night before, for instance, and some hit, some didn't. Jeff, you use the screener as well, so maybe you want to take us through your screener.
So, and similarly, and like I said, I'll try to be brief as well, with kind of comparing Sandy's strategy and mine. I was very similar as well. This is a little screenshot of mine where I was really interested in, I love cash flow. I love companies that have money available and money to invest in their own. I wanted the companies that had earnings surprise and was at a reasonable price, right, that I could invest in. And these are the results that came in, and every one of them I went through, and Decker is the one that I bought yesterday as a result of this actual report. And you can see here as well, everything is green from the bottom up. It was oversold with the pullback. They had a great earnings report and was able to place the buy order here. And I feel very comfortable. It is well above the SPY line. There's all indications this is going to continue to grow. So I'm really confident with that. And I'll touch base with it on a daily basis just to kind of get a summary and look to try to identify opportunities to get out if that's the case. But right now, all indications are I felt really comfortable with this, and this was definitely one that I pulled the trigger on yesterday.
Good choice. Great choice.
We'll find out. No.
I'm pretty confident too. Do you want to read this, Joe? Jeff, or do you want me to address this?
No, I mean, this is literally my life, and most everyone was probably not in agreement, right? I have two boys, so my life is not my own, and then trying to identify what to do and where to invest was just something that I let life push this to the back burner, and I just didn't take control of it. The amount of time I have put into this process, I took about a month to really get knee deep into the tools and the information, so I got comfortable with it. But honestly, this last week, I've spent maybe 30 minutes in the morning just identifying opportunities and adding to my watch list. I now have, I think it's 11 right now I have at the watch list. I did add Lazard, just so we're all on the same page. But I'm an individual investor and trader. How many of us are like that, right? There's just not enough time in the day to do the work Chaikin Analytics puts before me in minutes. And I will tell you, I'm just as well. So Cheryl and I are on the same page for sure.
Great. Awesome. Okay, so this is, drum roll, the thing you've all been waiting for. The biggest challenge, most of you identified, 72% of you said that timing, when to get in and when to get out, is the biggest challenge. So let's break this down. Well, buy signals, we've got the 6 pairs. Jeff and I have been pointing out those little green triangles as we've gone along. They are very helpful. They're not dictates, because just because something's oversold doesn't mean that there's, for instance, money coming into it. So you have to look at it in relation to other indicators going on with that stock. But if you use that in addition to this overbought, oversold, is the Wyckoff chart pattern, this can really help you time your entries and exits. So how do I know when to buy? Well, if you've noticed with the examples I've been pointing out, the buy signals, I've been pointing out the stock needs to be oversold, dipping down. And I want it to have that classic bull pattern, strong power gauge rating, strong money flow, strong relative strength. How do I know when these signals trigger? Well, we have what we call an alerts view on the workstation. You can with a click of the mouse, you can overlay this filter on any stock list. So I've done this on that short watch list that I just put up a few minutes ago. And you can see there's the relative strength buy on Lazard. There's also a relative strength buy on JP Morgan. But it's also telling me that there's a negative estimate revision. One of the analysts has updated their estimates for JP Morgan's earnings and lowered it. So that's something to take into account. So this gives you really the kind of top line executive level actionable changes that are going on with stocks on your list. I overlay this on my watch list and on my my stock list every morning and every afternoon after the close. And this is basically my 15 minutes a day. I mean, it doesn't really take much more than that. I'm going to move on to when to sell because that is the biggest challenge of all. It's pretty easy to get in, not easy, but with the indicators and with the setups, it's pretty easy to tell when is a good time to buy a stock. It's more challenging to know when to sell. So we've broken this down into two scenarios. Either you're taking the profit or you're sensing that that stock is breaking down. And let's break it down here. Taking the profit. There's a couple of scenarios where I take the profit. Price hits that upper volatility band, and I'll show this on the examples. It's overbought, you know, it's zigging up as opposed to zigging down, or it spikes up typically after a strong earnings report, although in the case of Jeff and his ABC, it spiked up 10% on the news. Doesn't matter what causes it. If it spikes, consider to take your profit and say thank you. So let's look at a couple of these. Centa, this is one of these small cap stocks I was in last year. I had it on my watch list. I bought it back in September. You see this triangle here. This was the, I think it was the relative strength. Yeah, it was relative strength breakout signal back here. And everything else lined up. Power gauge was just turned strong. Relative strength kicking in. Oversold, dipping down, and you can see money was starting to come in. And you can see what happened when all those things line up in the next couple of months. It accelerates the price. Went sideways for a little bit, and then it spiked up, and it reported earnings. And the interesting thing is your eye does get used to these patterns. And so you can start seeing what happens with a stock once they report earnings. In this case, every time they reported it, it spiked down and then it spiked way up. So it reported spiked down 10%, and I'm going, oh, yeah. But then I look back and I go, well, you know, I'm hanging in there because everything's green. And this is what it did before. It went down and then turned around and went back up again. So I was patient and I got rewarded, and it went back up again. And I sold it up here December 5th. It went above that volatility band. And that's a good place to say, take your profit and be happy. I think of these volatility bands as a channel. I'm a sailor. And when I stay in the channel as a sailor, I'm safe. If I tend to go outside that channel, I can run aground and get into trouble. And typically a stock does not stay above this upper volatility band for long. So when you see it bump up there and exceed it, in this case, it's a great time to take your profit. Likewise, on the way down, you know, if it goes below that, as you can see here in January, it did, this would be a good place to say, wow, I better get out of this stock because it may not stay up much longer. But note what's happened. You know, that stock really did start to break down in January. Neutral power gauge, relative strength, negative, money coming out. And then you see you started to get these red triangles, these sell signals. Now, interestingly enough, they reported, again, they followed the same pattern. They went way down and then they went way up. And if you had owned this stock, you would have known from looking at the chart, get the hell out when it hits that upper volatility band. But this is how your eye gets used to reading these charts, and you can make sense of them pretty quickly. Okay, quickly, LPL Financial. I took profit on an earnings spike. This again had been on my screener, on my watch list since late September, excuse me. I bought it, this yellow arrow, January 19th when it pulled back to 58. I wanted to buy this before earnings because I had a sense that they were going to exceed earnings estimate and spike up, and that's exactly what happened. So when they did spike up, it's just like 2 weeks later, again, hit that upper volatility band. I said, thank you very much. I'm going to take my 9% profit and invest in something else. Columbia Sports, again, this had been on my watch list. I bought it on the September 28th. I got a momentum buy signal in my watch list. And again, everything lined up. Oversold, strong money, strong relative strength, strong power gauge rating, and a buy signal. So I rode a really nice wave. They reported earnings just recently. I think it was February 9th. And it spiked way up to 77. Again, upper volatility band. So I said, thanks. And think of it. September 9th, there's a lot of volatility going on. This is when a lot of stocks are dropping 10, 20% intraday. I mean, there was a lot going on. But these indicators give me the confidence to hold this stock and expect that spike and take advantage of that spike. And on this one, I took a 25% profit. I mean, this is going to pay for half of our trip to Florence for 2 weeks in May. So that's cool. Just on this one stock, during this highly volatile period. Jeff, I know you walked us through ABC earlier, but let's just, revisit that one too, because that again is a 10% profit on a spike.
Yeah, and let's be clear, my 10% profits are not taking me to Florence, everyone. Just so we're clear.
Rats. They will.
But it will, but it will. And it's, and this is just another opportunity. And again, one thing I do want to mention to those who are still hanging on, and thank you. And I hope that means you're hearing some stuff that actually kind of resonates with your own circumstances, is that this ABC, again, as I mentioned, would never have really even come across my thought process had it not been for the email that I received as being a member that you get every day. So had it not even come across my inbox, I'd have never been alerted to it. I wouldn't have made the 10% or 9.5% profit in literally one day. So these are the types of tools and additional value adds that you'll see as a member as well. And hopefully you guys take advantage of it.
Great. Thank you, Jeff. Okay, breakdown. Nobody wants to go through a stock while it breaks down, but it happens. So how can you avoid it? Well, these are the, quote, rules that I've identified for myself. Power gauge turning neutral, and if another indicator like money flow or relative strength turns negative, that's definitely a time to take a closer look. Certainly if I get the sell signal, that red triangle. And certainly if the price drops below that orange line, that's the long-term trend line, or the lower volatility band, that's that dotted line on the bottom. So I still use this example. This goes back to 2016 and 17 because it's really the best one I have, and I don't wait for a stock to break down before I sell. Fortunately, I get out on those spikes to profits. So this is the best one I've got. Pretty much the only one I've got on a breakdown. So I bought this stock. This is an old slide. This goes back to 16. So I bought it back here. I think there was a buy signal that came in, but anyway, it doesn't matter. Momentum buy signal that triggered back in here, and it had been on my screener. I got that buy signal. It was an insurance, very strong industry group all year long, and I had a nice run with it, and it bumped up to the upper volatility band here in February of 2017. And power gauge was still strong. Relative strength was still strong. It was overbought, meaning it was, spiking up, great time to sell. And the money had just started to turn. And looking at that money flow just starting to turn and hitting that upper volatility band, I thought, boy, this is a nice gift. I better just take my profit, my 17% profit, and get out, which is what I did. Now, 2 days later, they did something really crazy. They pre-reported very negative guidance, and the stock immediately dropped 10%. And they reported like another week later, the stock dropped another 6%. And then you could see it clearly, everything crumbled and went, the stock totally broke down. Neutral power gauge, negative relative strength, money coming out. And look what happens when those three things line up. It just is a disaster and goes straight down. The stock is now, let's take a look at today. This is today's chart. The stock's now at 722. It's like over 60% below where I sold it last February, almost a year ago. But you don't want to live through that pain. That is pain. Now, this stock is reporting February 27th, which is a couple of weeks from now, 10 days from now. And I dropped down the component for earnings, so you could see earnings surprise. One of the things that indicators I value highly during earnings season is as bearish as it can get. Yet it triggered a reversal buy signal today, and the power gauge rating has turned green. So this is one of these things where it's not clear cut because you're getting a little bit mixed signals, which can happen. So I toss this out to you all. I think we have one more poll question, Joe, I think. Mm-hmm. Yeah, on this one. Oh, there you go. Perfect. So what would you do now? Buy it or just watch it? Or if you're an options trader, would you buy puts, which mean you're betting on that stock going down?
All right, let's see. We'll give that just a few seconds. And all right, let's take a look. All right. Looks like most of you would just watch it, not buy it now.
You guys are professionals already.
Yeah, exactly. That is just awesome. I mean, look at that. In 5 seconds, you guys, you get it. Yes, it did trigger a buy signal. So you're saying, well, gee, maybe I should buy it. But I said, and you listened, that just because you get one buy signal doesn't mean everything else is lined up, which clearly it's not. Money flow is negative. Relative strength is negative. It is oversold. But clearly, you wouldn't want to buy this. And I'm not sure you'd want to trade options on this either. Joe, you can address that better than I can. But I think you all made a wise choice. 80% of you said, no, just don't get involved. There are better stocks to trade, right?
That's for sure.
Okay, so here's Norm, one of our members who does trade with us. I think Joe talks to him pretty regularly. And he says that through the system, his portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent. I always go back to that consistent. Consistent earnings were just not a reality. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So we really do take an interest in your success. Your success is our success. And we like to see our members successful. Okay, very quickly, and if you can stay with us another 5 minutes, I think we'll be able to wrap this up. Avoiding pitfalls. You know, this is as important as identifying the winners, is to know when a loser is upon you and to avoid it. And it's basically the reverse of a classic bull. So let's go with Warren Buffett, one of the legendary investors of all time. Avoid risk whenever you can. It sounds obvious, but risk is part of investing in the stock market. There is risk and you will lose money, but to minimize it is the key. So looking for these patterns is our antidote to losing money. And this is a classic bear. Everything is red, 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 red. Sell signals on the way down, disaster. These are where many of our members have made a lot of money trading options, betting on the way down, and these sell signals really help them. And you can see going into earnings, it was pretty much a no-brainer that they were going to disappoint, and guess what they did? They disappointed. So you can use these as an options trader, and we teach our members how to use our options overlay to make some really nice profitable trades. Tesla, you know, everyone loves this car, but this is not a stock you'd want to own, right? Look at this scenario. Not good, red. And Under Armour. And Jeff, I'll bring you back to this because you introduced us to this at the beginning when you introduced yourself, saying you had sold Dunkin' Donuts and Facebook at a profit, put the money into Under Armour, and I'll let you take it from there.
Yeah, I'll keep it brief, guys. I didn't have Chaikin Analytics. I didn't have Chaikin Analytics when I did this. I was just relying on me being foolish, going, hey, I had a great run with Dunkin' and Facebook, and they just invested in Stephon Marbury and Jordan Spieth and blah, blah, blah. And I bought it and rode a brief ride up over $50, and then you see it went sideways. But what I did not have was the data and the analytics to show me the caution, the arrows, the areas that were concerning. And if I'd have seen this page here, I'd have sold a hell of a lot earlier than I did. And I only sold when I did because I had reached the point where I'd lost all of my profits from my two previous purchases. It was right before Christmas. Their earnings report was coming up next month, and I wasn't 100% sure. And I did not want to tell my wife, oh, by the way, those savings that I used were now, you know, Merry Christmas. So I sold it, got out, and thankfully, my fear, my emotion got the best of me here. I ended up saving another 16% fall from the next 30 days. So, but all I'm saying is don't do this to yourself. There's no doubt there's a number of us on this call that have done or experienced the same type of thing when you allow motion. Because I was like, there's no way it's going to continue to go down. They're trending up. They're in the marketplace. They're doing all these things. And I talked myself into staying into it, and that killed me. So this would have removed all of that, and it would have been a much more Merry Christmas.
Oh, well, this year will be a better Christmas.
Clearly.
So here's thank you, Jeff. Here's Under Armour today. Now look what's happened here. They came out with earnings and they disappointed. I mean, you see this little EPS is red. That means they disappointed, and you recapped up here. Yet the stock has spiked up 22% in the 2 days since it reported. This is this crazy volatile market right now. So what do? Let's have one final poll question here, because again, this is kind of it's not clear cut. You've got a lot of red, but you've also got a buy signal. So what do? Do you want to buy this? You want to watch it? Or would you trade an option?
And let's take a look. While we're at this, since this question applies, there were some questions so far in the Q&A window as to whether our platform helps with options trading. Clearly, as you can infer from this question, it certainly does, and there's more that we can expand regarding that later on.
Yeah, we have what we call options play overlay, which gives you the best risk reward scenarios for a stock. And Josh, who's a colleague of Joe's, gives sessions every, Tuesday and Thursday on how to use Chaikin to trade options?
Every Tuesday and Thursday.
Yeah.
All right. And it looks like most of you would hold this. Or, pardon me, would just watch it and not buy.
Yeah. Yeah. Good. Yeah. And I think that's the right answer. There's too much uncertainty with this. It's only been going up for a couple of days. You want a little bit more. I mean, I always like a couple of months uptrend on a stock before I'm ready to pull the trigger. And this is just too premature, with a really bad history for years. So, they would need to do a lot more to romance me back into wanting to buy this stock. And I'm sure they'll never get Jeff back under any circumstances.
So, I think you're going to have to talk to my wife before me. I think there's no way I'm buying Under Armour right now. I'll tell you that.
I don't think so. But I'm thrilled that so many of you understand it well enough to give us the answers that you did, which I think are the right answers. So, I mean, congratulations. You all, you get this. You've got this nailed. Here's one of our happy options traders. 90% average return in his first 6 earnings trades using options play. All very simple, but instead of getting bogged down in due diligence, I was trading. So all this statistics that options traders tend to do with these spreadsheets and stuff, it's all now done for you with options play. And, Josh will show you how to use it. So let's quickly recap, 5 steps. Jeff and I gone through these pretty thoroughly, I think, but the tools you trust, that's our power gauge rating and our platform. Tips on what to buy, that's that classic bull pattern you want to look for. You want to buy strong stocks and strong industry groups. Let the screener do the work for you. And timing, everyone's biggest challenge. Use those signals and overbought, oversold, and the indicators to help you identify when to buy and when to sell. And avoid those pitfalls. Know what that classic bear setup is, all that red, and know to avoid those or profit on the downside. So we made a promise to you in the beginning that we would show you 5 steps to find winning stocks, even in today's volatile market. And I think the examples we used, especially in today's volatile market, I mean, Jeff and I have used that to our advantage, whereas most people have feared it. Oh my God, it's going up, it's going down, it's going all over the place. We're saying, bring it on. This is where we make great trades and investments. And again, this is also that we can enjoy life, put some money away for our retirement, certainly, but enjoy the road, enjoy the ride. And this is all done with our Financial Freedom Fast Track, which is powered by Chaikin Power Gauge. There's the options play overlay, which gives you scores and scenarios. Particularly that stock discovery engine. Oh, sorry.
I was just going to say the exact same thing, Sandy. So, the picture before, the monitor and the iPad. One of the great things about the website itself is how user-friendly it is on mobile devices as well. The ability to manage your data right there at your fingertips. I was with you at 12:30 yesterday afternoon and was able to make a sale on my phone. So having all that is really fantastic. It is incredibly well supported. It's award-winning. It's been recognized. It's really something else. It is one of the best stock idea platforms out there. It's been awarded by Benzinga last year, and so many people are raving about it. So we're really excited about that, and there's confidence in that. Boy, I hope this is me, Sandy. I hope when we do another one later this year, I hope this says Jeff Hammond and not Ken H.
We're going to have your name on there.
Yeah, but when you could take a look at someone who clearly is trying to invest in themselves. I have been trading stock options for many years with not much success. On January 4th, 2017, I found your system. I started the year with $235,000, and as of today, which was July 30th, my net liquidation is now $1.2 million. I would not have been able to achieve this without your system. And I just will tell you again and again, the proof is in the pudding. I wanted to be a part of this conversation with you guys because I felt Sandy's message is so great, but why not put someone who has made their first 2 trades in the market that we're in right now using these tools and the ability to show just how simple it is. So for those of you who are staying on, you're going to get rewarded. And in my conversation
Jeff,
with Sandy and Mark,
can I just give an update on Ken before we move on?
Yeah.
Sorry to interrupt, but this is July 30th, as you see. Harris, who talks to Ken regularly, got this testimonial from him yesterday, Valentine's Day. And he's saying he was making a comfortable $20,000 a week on his way to $1 million a year when I got caught by this correction. But he says, I can, then he says, but BTW, I guess that's between us. I was making $20,000 a week deploying $1.1 million. Not bad, but I think I can do so much better because with the gift of charts, I can always see the road not taken. So that's the update on Ken, $20,000 a week.
And this time next year, Ken's going to have another update, and he's going to have bought his own island. I'm
there
sure.
There you go.
You're going to Florence. Ken's going to buy an island.
Yeah.
So, and Sandy, you mentioned this earlier, and I think it's just so important that when you talk about having something that if you had all this information and it was so cumbersome to actually sift through it, you'd never use it. And that's why I think it's so important to note how well it's been received in the industry, the awards and recognition. And when you have all of this information at a glance, they're doing all the work for you. It allows you to save your lists. It allows you to narrow down your searches, what's relevant to you, what's your comfort level. I know my comfort level is a lot different than some of you on the call, and that's okay. And this is going to give you control. You see this here with the options and screeners. The ability to identify bullish stocks immediately. I don't have to worry about the other ones that may not fit my criteria. That's great. So this was one of those things I was like, I'm thrown in here. I want to help. I'm such a big fan of the analytics. This would typically be nearly $2,200 to be a member, right? So this is an annual membership. It's not just about, we're going to give you these tools and you're going to be on your own. What's great about it is that I get a daily email. Mark sends a weekly summary report with not only, hey, this is what happened last week, but this is also what we can expect over the next couple of days. And these are some stocks you might want to take a look at. And here's why. It was a 14-page summary report last Saturday, and he made the whole market and the volatility of Thursday and Friday, he made it make sense. It put me at ease so that I could prepare to make my first stock on Monday. So if you guys feel just as excited and energized by the idea of being able to put this in, I will tell you $2,100 is literally pennies of the dollar of what you're able to earn in a short few weeks. You won't even realize this. This is great. This is another one. Marie and I are like, seems like we're relatives. Marie says, I'm a relative novice to the stock world, as I was. However, I was able to exceed my expectations of return during my first year as a subscriber. After watching Sandy's 5-step method several times, I felt that I could learn this procedure. Thanks to Chaikin, I absolutely love delving into the market. And I've said the same thing. I get up in the morning, I want to see what they're talking about. I go in, I match it up with my screenshot. I have fun with it.
It's
Never
fun.
in a million years.
Yeah,
I think
no, it's fun. Something I used to fear and be terrified of is now so much fun. Love it.
And, I'm 20 years away from really retiring, probably, and I hope I never, stop doing something. But this really gives me a sense that I'm going to be able to maybe have more freedom of choice of what I can do with that money. And that's what's really exciting. So we're with $21.95. We marked it down to $18.95. This is some of the things. And talk about this, Sandy, because you do so many tutorials. This is a really great value add as well.
I think this is one of our biggest assets as a company, is that we invest a lot in your success. So our success is your success. And Joe has a whole department of consultants, really, who give small group tutorials. So when you subscribe by midnight tonight, for instance, you will be into one of these small group sessions as early as tomorrow, where you'll be walked through how to set up your watch list, how to identify when those signals are going to trigger, how to sort by using the screener, for instance, how to use that stock discovery engine. So, and you can go to as many as you want. It's unlimited coaching and support. And if you want one-on-one coaching to tie Chaikin into your unique trading style, you just set up an appointment with Joe or one of his colleagues. They're on the phone all day, helping our subscribers, our members, make the most of Chaikin.
It's great.
All right, so here's the final offer.
We are not giving away any Ginsu knives with this. This is our final offer. But what I found was really just, you guys have hung in here. This has been the end of the day, you guys have hung in there. If you are looking for the link for this offer, there's a code associated with it. It's in the chat box. So if you open that up, you can literally click on that if you want to read a little bit more about all of the benefits and features you're going to get as a member. But if you decide, hey, this works for Sandy, this clearly is working for Jeff, I think I can do this as well, you guys want to jump on this for $17.95, I highly recommend it. You will not look back, and we'll be with you the whole rest of the way. So I look forward to it.
Jeff, thank you so much. And Joe, we're going to turn this back to you now to close out the night. And thank you all for staying. We know we ran over, but I hope you found it was valuable information. So,
all right. Awesome. Well, thank you all very much for joining us again. To emphasize Sandy's message just now, that's again, and Jeff's here. That's $17.95 for a full membership to Chaikin Analytics. A few questions that I just saw. This does include everything, all access to Chaikin Analytics, including those support webinars that we've mentioned, plus of course, full access to the program and the options play overlay. I know we didn't cover a whole lot about that, but as I cited before, we have an entire program dedicated just to options trading. I know there were a lot of questions about how to trade options with Chaikin Analytics. We want to show you how to do that, but of course, that is all included here. Taking place tomorrow, we do have one more webinar. It's an onboard session. We're going to show you how this whole program works. It's a great way to kind of hit the ground running. There's also a lot of questions that I saw regarding the best ways, how to learn Chaikin Analytics. That is absolutely hands down the best way to get in the program and learn how this all works. So we'd love to have you join us. Please take advantage of our offer here. Again, that's $17.95 for a full year's membership with the Chaikin Analytics. You can reach us at 877-697-6783 or just go right to chaikinanalytics.com/Sandy. In the meantime, we want to thank everybody for joining us and have a wonderful evening.